I'm going to the city and I'm gonna do a city show. And I know all my fans wanna learn how to make some dough. I've been cruising up and down for trades each and every night. And with my iPhone reclining, I know we're gonna get it just right. I'll get inside your mind, we'll have a real good time. We're gonna trade today, we gotta trade today. Go askSlim.
Hi, I'm Steve Miller. Call me Slim. And this is the askSlim Market Week. It's a look back at what happened in the financial markets in the past week. And a look forward at what might happen in coming weeks. And hopefully lots of great ideas and opportunities for you throughout this show. Well, the stock market rebounded strongly last week as valuations, as a result of the big decline in the stock market, seemed way too compelling for investors to pass up. It was a typical sell the rumor buy the news reaction to the Wednesday Fed rate increase, which has been foretold for months. Early weakness came as China techs continued to collapse on the potential for delisting here in the U.S., and Apple fell very sharply early in the week as Foxconn shut down in China from the resurgent COVID, as 35 million or so of Chinese residents were locked down. Now, that has eased somewhat now, and Apple is improving as I speak. Also, China said, well, no one is going to stop it from taking over Taiwan, and that, of course, was not great news. And then there was a big reversal on Tuesday as oil collapsed from that $130 panic peak, falling all the way down to $94. Wednesday, China said it will support its economy. They said that overnight, and then our stock market and the Chinese market really started to move up. In fact, for China, it was the biggest two-day rally in decades. Wednesday, the FOMC news came out. Finally, they raised by 1/4 of a point, and they forecast 11 hikes between 22 and 23, and somewhere soon at a meeting starting QT, quantitative tightening, as they begin to work down their balance sheet. Initially, it seemed hawkish, and the S&P 500 on Wednesday fell from up 70 to down 13. But then there was a huge last-hour rally, and the market finished up 96 points on the day. That was quite a move late in the day. As far as the yield curve, well, it's now inverted. The 20s are now higher than the 30s. It's an odd bump in the yield curve, and the 2s to 10s are only about 18 basis points. So it's really tightening up. But overall, even though the Fed seemed hawkish, investors figure the bad news is out. And of course, the Fed itself is the bad news, as they have micromanaged the economy into a total mess. They have to raise rates now, and they're doing that into what is going to be a slowdown in world economies, actually. So they've gotten so far behind, they're just completely off the rhythm. And that, of course, is what causes malinvestment. As a matter of fact, Ludwig von Mises must be rolling in his grave, right there with Murray Rothbard. If you don't know who they are, well, they're worth looking into. Thursday, the rally continued. No negative news coming out. Oil rebounded, though, to $104. And then here on Friday, a mixed day overall, but it's triple witching day, and traders seem to be interested in locking in some gains, but still, it's strong here on the day. Dow down a little bit as the rest of the market is pretty firm. Bullard, he came out and said 3% interest rates is where we need to go to quell the inflation problem, and he may be right about that. Going into the weekend, you got to wonder, can investors be that bold? And of course, there's a phone call coming up between President Biden and Chinese PM Xi, and those warnings that Biden is likely to give Xi is not going to go well, as they have destroyers out in the Taiwan Straits and that warning this week out of China that nobody's going to stop them from taking over Taiwan, well, this is certainly the time, well, that's likely to happen. War's not stopping. And the Cold War, well, it's just forming as the countries begin to align. You see Korea with North Korea with the missiles being shot, and Iran shooting missiles over into Iraq towards the U.S. Consulate. All of that is the beginning of an alignment of a Cold War that is likely to go on for a long period of time. It might have been the plan all along. Anyway, the market is rebounding here on Friday again, and this whole issue, well, it's not over. Those stocks do look cheap. The stock market followed what we cycle analysts call the ideal track, expected for a decline into March, and that hit our targets, actually, both in price and time. Those objectives now met. S&P 500 fell about 14.4%, while the NASDAQ and the Russell down about 22-23%. And a bear market, well, that's here. I'm going to show you something right now because we've discussed and indicate that the European market was pretty much in line with the U.S. and that it was setting up for a large decline at the same time that the U.S. market was. And here is the FEZ. This is the stocks, the Euro stocks. And these are an index of the largest stocks in Europe. And for those of you that are new to our cycle analysis, on the bottom here are cycle brackets, and that helps us understand the rhythms in the market, money flows. And when each of these bottoms form higher, it's positive. You can see the rhythm right in here and the rhythm right in here. And you can also see the minor thirds very clear, right? 1, 2, and 3. When you get two of them lining up, we call that nesting. There's a synchronicity of cycles. That's where the largest declining periods come. You can see that right here and right here and right here. And this is the one we were talking about months ago that was likely to bring a decline right over here. That was 27.3%. Very large decline and certainly a bear market. And we believe that the bear market has a lot of time to go. When I look at this next cycle right over here, that bottoms out in October. So we're looking for a bear market rally, a bounce that might get you up here to about, let's just call it 44 here on the FEZ, and then likely turning down again. This says that springtime in here is probably going to be okay for the markets. I wanted to share that with you. Really interesting is the daily chart. Now, this is a weekly chart, and you can get our cycle analysis by going to askSlim.com and go to the cycle analysis workshop page and learn about our workshop that's coming up. And we're going to have a special on that in the next month. This is the daily chart here in the FEZ, and you can see that it has similar cycle rhythms, and it also was looking for a bottom right in here. You can see these cycles as they bottom, bottom, bottom. Just beautiful action in here, which really keyed us into the United States market. And you can see in here this island reversal at the bottom of the cycle. That is nice. And this is that weekly resistance right in here. So we're looking for it to continue up in here into this resistance sell zone, as we call it. So there's your weekly right there, and that gives you the bottoming that we were expecting. Just absolutely beautiful action in there when you look at the FEZ. And that 27% decline is probably the bottom of the first leg of the bear market. We'll say it's bottom for now, and that kind of puts it in a mode where if it pulls back, it probably could be on the long side. By the way, in that period, China fell 50%, and now Russia, who's been halted for 2 weeks, down 85%, and Russian interest rates are at 20%. Now, they're probably at some point going to get some upticks also, but we're in a worldwide bear market right now. So anyway, what seems right now is that the worst is over, as you can see for now. We expect that there is more risk coming into late April, which could give you a test of these lows, or maybe not quite get down that far, as investors now are looking past the valley. The only problem is the other side of the valley over there is a huge chasm. Traders, for now, we're in buy the dip mode, as you can see how this market is acting. But investors, watch for the red lights flashing, exit, because you're going to have a chance again as we get into the spring here, and I sure wouldn't miss it. Stocks for the week, best week in 16 months, S&P 500 up about 5%, NASDAQ 6.8%, Russell and the Dow up about 4 to 4.5%. So solid rebound for the stock market. Bond market got whacked as interest rates moved up. 30s down about 2 3/4 points. And the 20s were worse as we get that hump in the yield curve. I saw them bottoming in there, and I thought the 20s would do fine as far as getting a rebound going, but those rebounds absolutely failed. 10-year yields up 14 basis points to 2.14. The high was 2.24% for the 10 years. That's probably the highest we're going to see for a little while. Gold down $55, down to about $19.35, and silver down about $1 to $25.20. Make sure that you see our Future Speak show on Wednesdays. Now, Future Speak is the most comprehensive show that you will ever see on the futures and index markets. And our Popular Services preview still has about 6 days left on it. So you can go up to the top of the askSlim website and sign up for that, and you will still be able to get be able to look at next week's Future Speak show. The dollar is down about 0.7%, but still really strong. The haven bid still around, and the higher interest rates helping. And oil down about $6 on the week, or a little more. Traded down to 94 from that 130 peak, and now trading more like around 103. Our target for this rebound is about 108 to 113. And you could see that analysis in Future Speak also. Here's a reminder for you. Next week is my vacation week. There will be no Future Speak show and no market week. So the next market week will be on April 1st, as next week I will be taking a rest. Coming up, RV is going to give you a special look at swing trade setups and how he works on those in a preview of our member video. Katie, our really good cycle analyst, she's amazing, is going to bring you what we're introducing now is our cycle bottom tracker, and she's going to show you some stocks that are bottoming right now, talk about those. And I'm going to come back, and I'm going to bring you the stock market analysis with a 1 to 3 month view, and also something special for the shorter term day traders, as I'm going to show you our stock index report live stream, which is just amazing for short-term traders. I want to remind you to go to askSlim.com and explore that website. If you're new, you're going to become a free member or sign up for a few more days of our Popular Services preview right up in the top of the front page on askSlim. YouTube, do subscribe to our channel. Click the notification bell and you'll know when we post. I think we posted 8 or 9 videos in the last week. Make sure you like this video. Give us a thumbs up. And on Twitter, follow us at askSlim. For questions on our memberships and our huge offerings of education and analysis, you can write to Matt at askSlim.com. This is a preview of Stock Sectors. Stock Sectors is a video we do for our level 2, 3, and 4 members every single week, where we look at different groups. Every other week, Arvi does a fantastic job on this, and he brings you essentially lessons on swing trade planning using this analysis. This video that you're going to see is a preview of that, and he's going to look at XBI, presented by Arvi Ramachandran, one of our amazing cycle analysts.
So this is XBI. This is a very interesting pattern here. Let me zoom out on this chart. What we see here in XBI are really super clear cycles going back many, many years, with a dominant weekly, which is broken up into minor half cycles that you see right here, with key lows that have formed very close to the idealized timing going back all these years. What's going on now is that there is a low that is due to form. The low is due to 14 to 44. Looking for this to roll back up on the upside. You can see that our weekly momentum is starting to curl up slightly here, and this is something that we are watching very closely. Once this does turn green and positive, we will look for this to get up into this zone from 102 to around 108 or so, and that's with the XBI trading 87.5. So looking for a decent upside move here in the overall construct of a bearish weekly cycle, which with a much lower cycle low relative to the prior low. If we shift over to the daily, I have modified this slightly, shifting this daily cycle left because there's a likely low that has formed here in the XBI, and we are just getting into this short-term rising phase. So what are we looking for is we're looking for a move to this short-term 78.6 over the next 1 to 3 weeks, and that's right around the $95 level. So what we'll be watching for is for a higher low to form relative to this most recent low here at 80.34, and then that would likely trigger that next upside move here in the XBI. So that's really what we're watching for very closely. So a very interesting pattern here setting up, and obviously a laggard that could play a little bit of catch up.
I hope you loved that video. Arvi does such an amazing job. This is an announcement of our new cycle low timing tracker. It's in beta. Katie Anagastos, another one of our great cycle analysts, and you'll really enjoy her as she does more and more. She's one of the best at this and really understands cycle analysis like very few people do in the world. She's going to show you how we use our cycle timing tracker to report, essentially, after we identify cycle bottoming conditions. These are essentially the end of a decline as something starts to make a bottom and setting up for, well, time to cover shorts if that's where you are, or long side opportunities that are setting up. So watch Katie as she does just an amazing job at explaining what we have right here.
Here at askSlim, we practice a type of technical analysis called cycle analysis. We all know that prices in the stock market don't just move up in a straight line or down in a straight line forever. In an uptrending market, prices move up for a period of time, then pull back, then up again. In a downtrending market, the opposite. These oscillations are cyclic in nature and represent money flows into and out of a market. These cycles are often surprisingly predictable, and the points at which they change direction are potentially lucrative opportunities. So to call our members' attention to these opportunities, we just released a new tool called the Cycle Low Timing Tracker. It's designed to let our members know when a symbol is in a timing window on the weekly or daily chart, when we would expect a cycle bottom to form and for that symbol to make an upside move. So what you're looking at on the screen is the latest cycle low timing tracker. You can find more information about its structure by going to askSlim.com. Right now, of the symbols on our focus list, 29 of them are in weekly cycle timing and 13 are in daily cycle timing. Some are even highlighted as being in both weekly and daily cycle timing. And when that happens, we really have the potential for some very lucrative opportunities. So let's take a look at a category that was recently put on the report, the financials. We have Goldman Sachs, we have JP Morgan and Morgan Stanley, and we have the financials ETF, the XLF. And aside from JP Morgan, all of them have had enough positive price action to also make it into the bottom pending category on the report, right here. And all of them have had sufficient positive price action in the daily time frame to make it into the bottom confirmed category on the daily chart. So pay attention to this category for further upside opportunities. We even did add a trade idea in Morgan Stanley to the website today. So let's highlight another big name opportunity, and that would be an opportunity in Google. You will notice that Google is in bold here on the timing tracker. That means that it's currently in both the weekly cycle timing window and the daily cycle timing window. And in addition to being in both of those, it is also in both bottom pending weekly and bottom pending daily timeframes. So that means it's had sufficient positive price action to trigger our algorithms that indicate the bottoming process is underway. So watch for further upside opportunities in Google. And then to wrap this up, even though there are very many opportunities to highlight on this report, let us talk about SPX. That's the cash index for the S&P 500. On March 10th, our askSlim algorithm highlighted the SPX as a bottom pending status. So it appeared in this category on our report and called our members' attention to the fact that the bottoming process was underway and highlighting the probability of this current rally. So currently on the report, as you can see, we have it as bottom confirmed and it has been moving up nicely. In future weeks, this report is going to highlight symbols such as Newmont-McMoran, Newmont Mining, Freeport-McMoran, Chevron, and ExxonMobil as some of the energy and material stocks come into their timing windows. So stay tuned to the cycle timing tracker to be able to catch those opportunities and to learn more about cycle analysis and the cycle low timing tracker. Please do visit our website at askSlim.com.
Thanks, Katie, for amazing work. Really appreciate that. This is the stock market 1 to 3 month view. We're going to look at the SPY on the weekly, and then I'm going to show you the SIR live stream, which is for short-term traders, and our level 2, 3, and 4 members absolutely love this. So I'll give you a peek at that and show you what the live stream looks like today. So the first thing we're going to do is we're going to go into the stock market. So I had the FEZ up here. In the beginning of the show, I was talking about this and how it was indicating to us that the stock market was going to have a large decline, and it did, and how it aligns with the stock market here in the U.S. And here is our analysis here for the stock market. Just a reminder to you that we do cycle analysis. We are one of the few teams, analytical teams in the world that brings this type of analysis, and this is our version of it. On the bottom are cycle brackets, which help us understand money flow. They're made up of multiple time frames, and we also look at shorter term time frames or longer term time frames. We look at monthly, weekly, and daily for cycle analysis. We were looking for the stock market to have a large correction right in here, which would likely bottom either sometime in March or sometime in April. And I'll show you in a second those two scenarios. These are the minor cycles, as you can see right in here. And when this cycle bottomed and then failed and got below that cycle low, that set up the large decline that we saw, 4.4% in the S&P 500 and about 23% in the NASDAQ and in the Russell. Let's take a little closer look here as we look at the scenarios for the next 1 to 3 months. And I want to remind you, if you want to learn cycle analysis, go to askSlim.com workshops, to the workshops in the top navigation, and we have a free video on there and tons of information on that cycle analysis workshop. We're going to be offering a special on that sometime starting in early April. So we want to kind of cue you up to take a look at what that is and get ready for the special that we're going to offer. So right now we could see what we had in here was essentially this cycle right in here had bottomed and then rallied and now started to move down again. So I kind of have that kind of squished right over there, but you can get an idea of how the cycles shape up. With those lines in the middle are off the daily. So right now we're in this rally right over here, which is this rally right here. That was expected. Now the question is, which scenario are we in right now? The decline was 14.4%. The rally is right on time in here, and it's very strong, blasting off here close to 6% on the upside right now. as the market gets that strong rebound. The question is, will the next sell-off take out this low and even get down to this major 38.2%, which would be a 20% bear market? Well, with the other indexes having been down that far already, it is certainly a possibility. We just don't know for sure how that is going to set up. Let's look right over here a little bit deeper, as you see right there. And one of these two scenarios is what we see. Either this was the important low right over here, and then we get into this period of upside rebound. It could be a test of the high. Most bear markets get up between the 61.8% and to about the 78.6%. That would be 453 to 465 in coming weeks if that was the low. If this was not the low, and it does come down one more time into this April period, which is what the daily pattern is suggesting can happen, then we would expect that it probably wouldn't quite get up as high as that, because that decline would be pretty severe. But everything we look at really points to the fact that this period in May and June is a rebounding period. Right now, between March, end of March, and into April, May, it's probably a lot of two-sided action, where you come up, you fail somewhere in this resistance area, you come back down, either you take out these lows or you don't, and then you begin to move up again. So we see a wide chop in here. Even if these lows don't get taken out, you're probably between 415 and 465. That's 500 S&P points in that range, with still the possibility of this decline out into April. We think that this decline out into April, if it takes out the low or it doesn't, is the timing to be looking for some pretty good long side setups in there for this period in here. So while we were extremely negative right in here, we're looking at this time frame in here as bottoming right in here, and then the potential for some better period out over here. This is the period that some people call of denial, really, because the market's breaking and they start to go up again, and they think that, okay, all clear, we're going back up to new highs like you've seen for 13 years. That probability is very low. The longer term patterns are just not in good shape. And that points out to this period way out over here into the fall time for some pretty negative action. And I've been talking about a bear market coming down to about at least 30% or more, and I still think that is the highest probability out later in the year. In the meantime, we're getting into a period where the bottom pickers are going to get paid, and things in some areas do look cheap because lots of stocks got hit very hard. So that's the 1 to 3 month view, really coming potential for a little more rally, coming down again, and then rallying again up into these resistance areas, and a rebound that really I think is a big hook. And that it's really the area where investors who have not sold yet really will have probably the last opportunity before another huge move to the downside. I think that is the highest probability. So now what I want to do is I want to look at, because we have a lot of short-term traders that come into this section, and I want to talk about a way to really improve your trading as far as the shorter term. I want to show you our stock index report. And I'm going to show you this whole week really quickly of what it was and show you the live one that's going on right now. This is kind of a day trading review that we're looking at for the SIR live stream. SIR live stream is available to our level 2, 3, and 4 members. This is Monday. We're going back to Monday the 14th. And you can get an idea. The market was really weak on Monday the 14th. This is the reversal scout right over here, which keeps you on the right direction of the market. We put in support and resistances, and the yellow areas are what's called acceleration zones. Once they get into the yellow area, the price, not the reversal scout, but the price, the odds are better than 80% that it's going to move all the way through it, as you see right over here. This, as you could see, there was a little hump right over there as the rally failed and turned down again, and this kept you bearish the whole time. As a matter of fact, the Russell looked weaker than any of them. And I want you to see as we move forward. So that was Monday the 14th. This is Tuesday the 15th. Remember, the market started to reverse on Tuesday. The reversal scout put you in, as it turned up right over here, moved through the acceleration zones and through resistances here on the upside, and these are actually the acceleration zones from the previous day, which it was getting through. And you can see that that reversal, Scott, really helped you be on the long side when that began to move to the upside. Great information. Lots of times you get information for pair trading also. I'll show you that in a moment. Look what happened here on Wednesday the 16th. Market was still strong. As it turned over right in here, the market got weak. This was a fooler as it had this amazingly strong close because this was FOMC day. So you really don't know what it's going to do at the end of the day. And this was a huge move, like over 100 points in the S&P 500, which this did not help you see. Early in the day you saw it turn back down here, which was nice. But this big upward movement, there's no way that we could have spotted that. And this was a news day. So normally we would expect that it would be a little crazy late in the day after the Fed. On Thursday, look at this. You know, the reversal, Scott, put you in and said long side as it really began to move up all day, move through these acceleration zones, kept you on the long side the whole way, just beautiful, as you can see that. And all three indexes very strong. Looking at that. So that's Monday through Thursday, a great look at what you see as far as what happened the whole day on all of those days, and basically kept you on the right side of the market and told you to stay in just beautifully through the whole week. This now, of course, is today. And remember that what we're looking at is the S&P 500 on a 15-minute chart, the NASDAQ on a 15-minute chart, and the Russell on a 15-minute chart. You can see in here that it has kept you on the long side. The market has been strong. The NASDAQ moved into this resistance area and is kind of stalling, but got through the whole acceleration zone here, about 80% of it here, and then failed. Here you could see through them all, it hit resistance and now is kind of stalling, but didn't turn over. And here is a key right over here. The Russell is weaker. So in this case, if you were a pair trader, you would buy the strongest, which is NASDAQ. You would short the weakest, which is the Russell, at the appropriate amount of sizing so that you're at some neutrality probably, and you'd be able to trade that pair trade. And it's very clear. And you see through the acceleration zones, long side, through the acceleration zone and curling over and telling you about the weakness in the Russell, and the S&P 500 still strong. So this is live right now, running live, and you can get this live by being a level 2, 3, or 4 member, and it will really help your trading in the indexes if you're a short-term index trader. We do it on the cash indexes. It doesn't matter. It still, extrapolates over to the indexes on the futures, and you'll be able to use all of this information. So this is live and trading right now, and you don't need any kind of a special platform at all. You can get our SIR live stream just by becoming a level 2, 3, or 4 member. If you want to come in at level 2, you can write to Matt at askSlim.com. He'll send you a special pricing so that you can come in for 3 months and really try it out. Even as a level 3 or 4, I'm sure he has something for you at special pricing. This is the amazing live stream, which really, really helps guide you. We have a ton of members that use this, and it's one of our strongest levels of membership, and also one of the most solid levels. In other words, the people that come in really seem to stay because they benefit from it. There's huge content in there. You'll get 600 videos from us also, and everything we have in level 2 and level 1. Check it out. And do become a level 2, 3, or 4 member to get the SIR live stream. You really get an example of how good that is. That is everything I'm going to show you today. I hope you found that amazing. Please do become a member at askSlim.com at any of the levels. You can come in as a free member right now. We're still doing the PSP. I want to remind you that I'm on vacation next week, so there is no market week coming next week. So you will still have a ton of content available to you if you become a level 2, 3, or 4 member at our website, because the rest of our team is still on it. I'm just not doing videos. On YouTube, subscribe to our channel, click that bell, and then you'll know when we put up one of our videos. I think we did 8 or 9 last week. And like this video, give it a thumbs up. Watch our member videos in the playlist and past shows. On Twitter, follow us at askSlim. And for any of our membership info, anything that I showed you, or on our huge offerings of education and analysis, write to Matt at askSlim.com. I want you to be so unbelievably careful. It is so crazy out there. And I'm always wishing you great trading.
Well, I'm going